Hey everybody, Mike Vacchi, PrincetonTrader.com with your Sunday night evening recap. Okay, so we got the employment number, and there just was nothing in that report that was going to keep the market down. So you're in a situation where 1670 early last week, late last week was established as a floor. And then uh, the Bulls were able to ramp that up, make new highs, deal with that 1700 level, and then we traded as high as 1705 near the close on Friday. Where do we go from here? Well, as we get a little closer to the 1710, 1712 level, it's going to get to be where the market really needs to come in and take a rest. We're currently trading 1703, so basically we had a flat open tonight. There's nothing particularly telling about the pivots. We've got get the daily come in 1701.33, the 3 days underneath 1696, 9 day at 1693. The 45-day is 1653.83, so we are trading exactly 50 handles above that, and it's 52 handles from peak price. So we are stretched. We are stretched. We're not to overbought, and we're certainly not up in that 70 handle crazy town type area that we like to fade. We dealt with a lot of unknowns last week with respect to the Fed and with respect to employment. And none of those unknowns knocked the market down. So you have to keep the big picture in mind. And what's the big picture? 1340.25. We make new highs up at 85.75. We retrace 38% of the whole move. We go back right back up, test those highs, and make new highs. So, are we due for a retracement of the larger move, at least of the move up from 53? Sure. I mean, we've done essentially 1553 to 1705, so 152 handles. But I wouldn't argue that it's straight up. I mean, we have consolidated along the way. Consolidated here, consolidated here, consolidated here. So this is not parabolic. It's not parabolic at all. And what it looks like is we're starting another up move. Now, the middle band here, the green line, is rising pretty steeply with price. And if we do pull back, I would expect it to be to test the green line. But I think absent a change in the news flow, absent some type of event, rumor, chatter, something that gives the bulls an excuse to take profits and step aside, and the bears an excuse to lean on things, you're not going to see much more than these one dip a day type of deals that come in and get bought. So I'm not bullish, but I'm not all bared up to fade it. If you're throwing a bunch of contracts at this right now, swing shorting this, you're probably already pretty frustrated. And I think your frustration is going to continue until we get a definitive punch through this upper Bollinger Band, which is sitting right now at 1709.75-ish. So you're going to need 1712 to punch through it. So the question becomes, do you want 10 handles of pain to get a better entry on a swing short? I don't want the 10 handles of pain. I would rather buy the dip, get through that upper band, and then I'll come in and short. Nobody likes swing shorting more than me, that's for sure. But you got to wait for your entry. So absent some news, I think this pattern of a dip and a buy and a grind higher is going to continue. And if you're a bear, you really got to be mindful of whether we start riding that upper Bollinger Band again. So the bears needed some of those questions answered in the negative last week, and they just weren't. Okay, everybody have a fantastic night. I'll be out with a pre-market webcast tomorrow morning. Until then, trade them well, and I'll talk to you then. Good night.